Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at Wanda. Now, Jeff, thanks for coming on the show today.
Yeah, thanks, and sorry about the technical problems.
No worries. Now, before we get your insights, let's first take a look at the cryptocurrency markets and see how they're doing. Bitcoin is on the way up, despite the fact that today it's down 0.33%. It's at 48,152. Ethereum is at 3,584.71. It's down 1.82%. Now, looking at regional markets, we've got the SGX, which is at 3,060.16. It's down 0.14%. Bursa Malaysia is at 1,548.02. It's down 0.47. Across the region, then we have the Nikkei, which is up 0.44% at 30,457.6. Shanghai Composite is at 3,585.71. It's down 0.59%. The Hang Seng is at 24,765.45. It's up 0.4%. Rounding up the numbers, we've got the ASX 200, which is at 7,387.6, down almost 1%, 0.97%. What's your view on the mixed markets, Jeff?
Yeah, I guess markets have been left to go their own way in Asia because the US close was actually fairly neutral. Most of them in the main indexes all closed within a hair's breadth of unchanged. What I did notice was that there was perhaps some slight rotation into the apparent safety of technology in the US. So we saw the NASDAQ finish slightly higher at the expense of the Dow. And today in Asia, we're seeing the Shanghai Composite, which is very cyclical, move lower, while the CSI 300 and the Hong Kong, the Hang Seng have moved slightly higher. So it could well be that there's some of that going on and there as well. The Chinese PBOC also injected 90 billion yuan into the financial system today by the repo market. That's ahead of a number of holidays across Asia next week, and I think that is also supporting stocks there. And we're seeing dip buyers in South Korea and in Japan. Regional Asia has mostly edged lower, I think, on those tapering concerns, because I think ASEAN is the most vulnerable to a Fed taper tantrum. And I believe that it's really iron ore prices and China-Australia relations that are weighing on the Australian markets today.
Now, speaking of China, you've got the Evergrande property developer debt issue, because essentially it looks like it's going insolvent. But that's 300 billion worth of debt. There is a fear that Contagion could spread across markets beyond China. Is that fear a real one?
I think most of that would be related to the banks and who holds what as far as the debt goes. And I think that is a very, very real possibility that we could see some contagion there. There'll also be these knock-on effects into the local economy. Apparently, Evergrande's business, generally, it's just its general business every day, supports about 1.8 million jobs in the wider economy. That would be also a knock to consumption and could flow through into some of those metrics for offshore companies trying to do business in China. My base case, though, is that the Chinese government is not going to allow a disorderly bankruptcy or collapse of Evergrande because of what we've just talked about. And I can see the most likely outcome being a very ugly debt equity swap. Well, ugly if you're an equity holder, less so if you're a debt holder. And all these banks are going to have to, they're going to end up owning a lot of Evergrande shares or stocks, I suppose. The wealth management products thing, I think the government will definitely intervene on, because they've shown in the past that they act quite vigorously when the public, members of the public lose money.
Now, the other thing about China is China today has applied to join the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, or what everyone knows as the CPTPP. Now, that's been signed off by 11 countries, including Australia, Canada, Chile, Japan, and New Zealand. Noticeably, of course, the US is not part of this. Jeff, what do you think about this sudden application to join?
I do wish they'd given it less of a tongue twister of a name, that's for sure. I think they use their imaginations there. I guess they're perhaps trying to outmaneuver the United States, because I think President Biden has made some noises about looking at joining that partnership once again. So it could be a preemptive move. I think if the US joined, the chances of China joining would be very little. I think China's also trying to project itself as an integral part of Asia, which it is, and wants to be part of this greater trade agreement. I don't think there's anything benign behind it, but I guess there are some politics.
Now, the other thing that's making news today is the Singapore government has announced a series of initiatives to boost the domestic stock market. So there's a couple of key things. Temasek is setting up a new fund to support high growth promising companies. That fund starts with 1.5 billion initial tranche of Singapore dollars. There's also another fund to invest into later stage companies. That's $500 million. And also, according to the SGX chief executive, there's a robust pipeline for potential SPAC listings in Singapore. What's your thoughts on this, Jeff?
Yeah, look, all credit to them. I think Temasek and GIC already do a lot of this early and late stage investing in growth companies anyway, so it's more of a continuation of business as normal. I think unless the small print contains some specific clauses that say when we come to IPO it has to be in Singapore, I think they're still going to struggle. I think this package will be very appealing to companies, say in the 100 to 500 million market cap range. But if you're a unicorn and you're looking at Singapore and you can get a 2 billion valuation, but if you do a SPAC, I mean, grab $40 billion. I mean, that's, well, to my mind, ridiculous, but an impressive number for a company that's never made money. But you can achieve these sorts of numbers in the United States and you can't in Singapore. So I think for unicorns, it's not going to be so appealing because, and the other thing is also, a lot of these shareholders may well be US VCs and PE groups, and they may be gently nudging towards a US listing because you're going to list where you can get the best valuation, and frankly that isn't going to be Singapore. So small mid-range, I think it's appealing. If you're a unicorn, yeah, not quite so.
Now, Jeff, thank you very much for your insights.
Always a pleasure.
Now, we've been speaking to Jeffrey Harley, Senior Market Analyst, Asia Pacific at Awanda on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.